Good morning, welcome to this Phoenix Blue update on Wednesday the 6th of July. I'm Tom Colley and I'll be talking to you about the markets and the news this morning. We had an interesting day and we've had an interesting overnight session in the Far East. We had a very quiet Monday as we warned and anticipated because the 4th of July US bank holiday. Yesterday morning was also very quiet, but following the US Open yesterday afternoon, we saw some significant moves in the market, which may offer us direction over the forthcoming days, if not longer. But we'll start over with the news. Yesterday we had services PMI from the UK. Came in under expectation. It's not good when you factor in that these figures were pre the Brexit vote. So quite potentially a negative figure here will only be exaggerated by the sentiment around that Brexit vote. We had Mark Carney talking at 11 o'clock, the Governor of the Bank of England. The Bank of England released their financial stability report that comes out every 6 months. So that was the main purpose of his speech in principle. But he spent a long time reassuring the markets, reassuring businesses in the UK that the Bank of England stood ready to do whatever it takes in order to support the economy through what will inevitably be difficult times ahead as we learn more about what Brexit might mean. We also had dairy prices from New Zealand yesterday afternoon. Things to watch for today. 9 o'clock, we've got Mario Draghi, the president of the ECB, the European Central Bank, speaking at 9 a.m. He also always has the ability to potentially move the markets. People or everybody in the markets will be looking out for him to say anything about the ECB's opinion and approach to Brexit concerns. So we will be keeping our eye on that, and certainly staying out of euro-related markets until that item has passed through. Canadian trade balance we've got at 130. ISM non-manufacturing PMI, this is effectively services PMI for the States, comes out at 3 o'clock. Some people see it as a precursor to non-farm payroll on Friday. If we see positive non-manufacturing PMI, they will interpret that as potentially good job numbers on Friday, and obviously conversely, if it comes in negative, more negative figures on Friday. We're well aware of NFP coming on Friday. As usual, we'll be out of the markets at that time, but we'll tell you more about that on Thursday and Friday's morning updates. This evening then, another major event. We've got the release of the FOMC, that's the Fed meeting minutes from the last decision they made on interest rates, etc. That meeting was pre the Brexit vote. However, the minutes from these meetings are updated, I'm led to believe, in the intervening period, so we will be looking for any indication or any referral to Brexit or anything in that nature. And then first thing in the morning, equally as significant, we've got the Bank of Japan Governor Kuroda speaking. When we go through to the yen chart, we'll see the yen has been strengthening again. This is what they really don't want. We've been anticipating intervention in that market. What Kuroda actually says will be interesting if there is any comment about actual intervention. I think possibly not formal announcement of intervention, but certainly something we want to know what's being said. So if we're not up overnight, certainly first thing in the morning before we do anything, we'll be looking into what's been said there. Okay, in the Far East itself, this is the Shanghai Composite. We continue to have a bullish week on this. This is an exception in terms of equities. Equities, certainly in the US, are significantly down on the week and were down overnight on this session. What's probably more interesting coming out of China, and many of you may have seen this US dollar Chinese yuan exchange rate chart many times and really wondered what, when it's actually becoming significant. Well, we're starting to see something here which I believe is significant. This is the previous high, or in which case is the previous low in value of the yuan relative to the dollar. When China struggles in its hugely manufacturing-based economy, it will look to devalue the yuan. It actually made a one-off devaluation that you can see very strongly in August last year there. It was then allowed to drift or in a much more managed fashion over a longer period of time through to here. Now what we have is the overnight session, as I took this slide half an hour ago, where the close was above those previous closes at that high. So we're getting into an interesting level. Why is it interesting? Well, if we break these highs, I think we'll see a big sell-off in equities. If you look back on, let's say, the S&P chart around this August date there and see what happened, there was a big sell-off in the S&P and all the US equities at that time. The same can be seen through this period here, which is the period, or predominantly the period of the sell-off, is the post-Christmas sell-off, where we got this strong part of that move through there. So if we see a break above these highs, I believe that will have an effect on the equities markets again, or potentially have one. So that's why we've been watching this chart, or one of the reasons we've been watching this chart on an ongoing basis. We are reaching a point where we are getting some sort of signal from it. On the Nikkei, well, we had another bearish session overnight. This is reflected over on the US dollar JPY, the yen exchange rate. What we can see here is this is a weekly chart, but we've bearish this week so far. These levels you can see in here are orders that we have in place, are levels at which we anticipate Bank of Japan intervention, on the simple basis that we saw intervention immediately on the day after the Brexit, or the morning of the Brexit vote announcement, and we saw these levels being supported very significantly. I mean, that one clearly there down to around $99 there. It was a clear level, but there's also one around the 100 level there. We're looking at these as long-term trades. We do think that the Bank of Japan will need to and will intervene consistently. Our initial targets on a 3 to 6 month time frame are around the highs up here, 124, something of that nature. Over on the US dollar yesterday, well, we had a bullish day yesterday. We've had a bullish session so far based on the overnight session in the Far East. We've had this bear flag here. We've had a break above that bear flag, possibly even a retest of it already. We're above the level that the price was stalling around through yesterday's session at $96. So we can interpret that as dollar strength, and this will give us more confidence to take on FX trades as the dollar rises through to 97, which is the next key level for us. And in this bit, I've got it marked as the top of a channel there. So that will be an interesting point where we will see a pullback, but we will be looking for intraday and shorter term end of day trades through that period there, bearing in mind all the news that I've just mentioned, like FOMC on Friday, non-farm payroll on Friday, and the FOMC minutes this evening. I would suggest that this 97 level is going to be the crux for NFP figures. If we get poor figures and we're up around this level, I'm sure we'll fall away again. If we get good figures, I anticipate we'll break above 97 based on that. Over on the euro, we're already short this market on the retest of the channel here. Nice move we got through the day yesterday based on the dollar strength that I just mentioned. Next key levels around here, we'll be looking for a break pullback to scale into this market. Again, we will be correlating this very much with the strength of the dollar. Over on the S&P, bearish day yesterday. This is today so far, which is bearish based on the overnight Far Eastern session, as I mentioned. this now appears to be a risk-off scenario when we go over to look at the safe havens. Well, to a certain extent, we've already seen the safe havens. We saw the yen selling off. We saw the Nikkei selling off, and the yen strengthening as a safe haven in that respect. This is the S&P. We'll in a moment see gold, and we've seen strength in gold over the last couple of sessions. We didn't see a weakness in gold as we saw this strong bullish move from the end of the Brexit scenario, shall we say. This was the Brexit vote, this was the follow through, but then we had a really strong pullback to these levels, but that wasn't reflected in a risk off scenario, which is unusual in itself. Strength continued in gold and silver, and to a certain extent the yen, but now we've seen a turn in this market in equities in general. We're seeing a move long again on gold, and here is gold. This is the weekly chart, and we are seeing the price has moved above a level here at 1350, but more importantly it's broken above this significant trend line, which is what I've been waiting for. We do have a commitment of traders signal here saying that the market is potentially at an extreme, at a high, and needs to pull back. Having said that, the circumstance that I've just mentioned, where we've had a rally on the equities without seeing a pullback on safe havens, suggests that there is more to come on the long side from safe havens, certainly in the shorter term. So we'll be looking for an entry here, and 1350 is around a big nice round number. I'll be looking for a pullback to a retest of this trend line around that sort of level today. Okay, silver also very similar. It's broken a very similar trend line, so we'll be looking for opportunities in that in the same way. Just to keep you updated on one of the trades we've been working on or in for quite a period now. This is a trade that is in corn, and through the post-Brexit period we've been having to concentrate on commodities, and specifically agricultural commodities rather than just the normal silver, gold and crude oil. And in order to do that, we've been using our commitment of traders analysis, and we had a signal here telling us this was the top of the market. That gave us the confidence to place an order based on this high test here. We also have seasonal weakness in corn through this period, right through to the end of the July in principle. We had an entry here just below this high test. It actually took 9 days to significantly break this range and then set off, but what a move that was when it set off. And this isn't unusual for commodities and is something that we know about, we're aware about. So we were sat within this quite comfortably with our stop above there, in order to wait for it for what we call distribution to occur here, and then the sell-off. We had a lovely move down. We then, as you can see, we had a spike down, or a low test, followed by a high test. We took that as a scale in, so we got back in at that level. We'd already taken profits from this trade at that level, so we'd 50% off. We've no risk on the table. Again, another lovely move down to what was our T2 target from the original trade, but our T1 target from the add-in. Again, we've taken significant money off the table here. We've got stops with profit locked in, not just at break even at this level. That move from the entry to down here is about 800 pips. We're now looking for another move below this level, and this is, I put the weekly chart in here so you can get a better idea of the scale of the market. So this move down here is 800 pips. There's another 200 potentially to come. We're looking for a break or a close below for a retest of this level down to these 2014 lows here, which is our final T2 target, and we'll be unless we see it as really, really bullish and going below that level, when we might allow a little bit of money to run, we'll be taking our money out of there, having taken 1,000 pips in that trade. Now, if that's the sort of thing you want to learn about and how to do, as I said, that involved a couple of the things that we specialise in, which is the Commitment of Traders report. We had a signal from there. In addition, we layered on top that seasonality, and also we obviously used our technical skills and knowledge in order to have 3 levels of probability so that we were very comfortable in that trade, even though we were sat waiting for it to trigger for 9 days. Now, if you want to know about that sort of thing, we've got a 3-day or 4 hours free trading on July the 19th in London. You're welcome to come along if you are already trading, have an account open, and would like to look at how we might be able to help you improve your results. There'll be, as I said, 4 hours of free trading with us, along with a question and answer section, or an ongoing question and answers. We had a really good session last month on this. The markets are looking like they're going to give us a little bit more in the next few weeks. So if you're interested in that and you want to come along and live trade with us, or watch us live trade, whatever you want to do, email us at info@phoenixblue.co.uk, either directly, or you can get the email address, the contacts page from phoenixblue.co.uk. This event will very shortly be put on the website, so you can actually get more details from there. But if you contact us, we'll book you a place and give you all the details that you need. Okay, guys, that's the end today. Thank you for listening, and we look forward to speaking to you tomorrow. Happy trading.